हेलो एवरीवन। आज के वीडियो में देखेंगे हाउ टू कैलकुलेट शॉर्ट टर्म कैपिटल गेन टैक्स ऑन इक्विटी शेयर्स और इक्विटी ओरिएंटेड म्यूचुअल फंड्स, also on debt instruments like bonds, debentures and debt oriented balance fund or debt oriented mutual funds basically. ठीक है, so let's start with the short term capital gain tax on equity shares. So let's assume, first understand the theory के what is the tax chargeable on short term capital gain tax on equity or equity shares or equity mutual funds. So simple, if you withdraw your investment within a 1 year from the investment date, then whatever the gain arises or the losses arises, it is a short term capital gain or loss. If the gain arises, then you have to pay a short term capital gain tax. Now this tax is applicable at the rate of 15%. So let's take an example. If you are investing rupees 1 lakh rupees, sorry, rupees 10 lakh rupees in equity shares or in equity oriented mutual funds, and within a 1 year, you are withdrawing that amount. And let's say your total redemption or withdrawal amount is 12 lakh rupees. So here you have clearly gained, let's say 2 lakh rupees. Now you are liable to pay a short-term capital gain tax, which is taxed at the rate of 15%. So if you calculate 15% of 2 lakh, it comes around 30,000. Again, you have to pay 4 to 4.5% education cess on this 30,000, or basically on the short-term capital gain tax. Similarly, if you hold your investment for more than 1 year, or you are withdrawing your investment after 1 year, then whatever the gain or losses arises, they are called as long-term capital gain tax in case of equity shares and equity oriented mutual funds. So let's take an example. If you are investing again 10 lakh rupees and you are entirely withdrawing all the amounts after 1 year, so let's say the withdrawal amount is 12 lakh rupees, sorry, any date, okay, just you need to uh, withdraw after 1 year. Okay, so let's say 10 lakh rupees are invested and you have withdrawn entire amount at market rate. Let's say it's 12 lakh rupees. So you can see that there is a 2 lakh rupees the net gain, but as it is comes under long-term capital gain, so you are liable to pay a long-term capital gain tax. Now here you will get a benefit that as you are holding your investment for more than 1 year, so the first 1 lakh rupees gain on your investment is exempted from the tax. So now here you are liable only to pay tax on the remaining amount. So let's say your gain is 2 lakh rupees and 1 lakh is exempted, then you are liable to pay tax on the remaining 1 lakh rupees at the rate of 10%. So 10,000 rupees plus education cess is your total tax liability for equity shares or equity oriented mutual funds if you are holding it for more than 1 year. Then we have a debt instruments like bonds, debentures, or debt oriented mutual funds. So if you are investing in this type of securities and you are withdrawing within 3 years from the investment date, then the whatever the gain or losses arises, they are called as short-term capital gains or losses in case of debt instruments. So let's consider one example that if you are investing again 10 lakh rupees and you are withdrawing within 3 years. Okay, so let's say the withdrawal amount is 12 lakh rupees. Now again, the short-term capital gain arises is 2 lakh rupees. And this entire gain is getting added. Okay, it's getting added to your current year income. Okay, and let's say the person or the investor is in highest tax slab. Okay, so 30% he is paying as the highest tax rate. So your entire amount will be taxed as per the highest tax rate or highest tax bracket of the investor. So in this case, let's assume if the investor is falling into 30% tax bracket, then you have to pay 30% on your capital gain. Okay, so in this case, so 30% of 2 lakh rupees is 60,000 plus education cess you have to pay. This is as a short-term capital gain tax. Now, if you are holding your investment in debt instruments or debt mutual funds for more than 3 years, then whatever the gain arises, that is considered as long-term capital gain and is taxed at the rate of 20% after giving a indexation benefit. Now here, let's assume the example that you are investing a 10 lakh rupees in debt instruments or mutual fund on 1st Jan 2019 and you are withdrawing that fund on 1st September 2022. So now if you consider here, so 1st Jan 2019 is the financial year of 2018-19, whereas 1st September 2022 is the financial year of 2022-23. So here you can see you are holding for more than 3 years, but you are holding it for more than 5 financial years. Okay, so here you can see how to calculate the tax. First, again, take an example that we are invested, let's say 10 lakh rupees, and on 1st of September 2022, we have withdrawn 12 lakh rupees. Now we have to calculate the indexed value or index cost of your investment. Okay, so here I have given an indexation table and respective index value for each financial year. So you just assume that the value or particular thing is, let's say, costing at 280 rupees in 2018-19. It is now costing 331 in year 2022-23. Okay, so you can see the inflation. Okay, so we are also assuming this inflation and we are getting this benefit on our invested amount. So let's say we have invested 10 lakh rupees. Now we have to compare this 10 lakh with the 280 because we have invested in 2018 and 19. But now when we withdraw 12 lakh rupees. Now we have to calculate the value of 10 lakh rupees in 2020 to 23. Okay, as per this index value. If 280 becomes 331, then how this 10 lakh rupees will grow? So we have calculated using this simple formula by multiplying your investment amount with 331 divided by 280. Okay, because we have withdrawn in the financial year 2022-23, but our investment year or financial year was 2018-19. Okay, so we have arrive at the index value of the investment or initial investment amount. So this is, but actual, if you see, we have gained a 2 lakh rupees because 12 lakh minus 1 lakh or 10 lakh. So you are basically having a 2 lakh rupees are actual gain. But because of the indexation, your difference, okay. So actual index capital gain is 18 lakh, 1,82,143, which is the difference between the index value and the initial investment. Now, this total gain is basically exempted. And that's why whatever the remaining or extra return generated by your investment will be taxable. So 17,857 is the taxable amount, and 20% of this amount is your tax liability. So here, in this case, 2571 is the tax plus education cess you need to pay as a long-term capital gain tax on your debt instruments. So thank you.